We're basically down to the final countdown, less than 24 hours until the FOMC meeting drops, and you know this thing's going to rock the markets. Look, we've all been sitting tight waiting for this moment because whatever move the Fed makes next could totally shake things up, just like we've seen happen every single time before. But here's what's got everyone buzzing. Pretty much everybody's banking on rate cuts coming our way. I'm about to break down a ton of stuff for you in this deep dive. We'll talk through exactly why these potential rate cuts deserve your attention. Plus, I'll give you the real scoop on what to watch for when tomorrow's meeting goes down. Let's dig into the good stuff. So first things first, let's see what's happening with the market right now. We're looking at $3.86 trillion in total market cap, and honestly, not a whole lot has shifted recently. The fear and greed meters sitting pretty at around 63, altcoin season showing 38 out of 100, Bitcoin's still dancing around that 118K level, Ethereum's camping out near 3,800, XRP's taken a tiny dip, we're talking 1.26% down in the last day. Most of the altcoins are still getting beaten up, with plenty of them nursing losses of 10% or more. Some are dealing with 5% drops, give or take. This whole messy trading pattern we're seeing, yeah, that's mostly because of how Ethereum's been moving. We've just been stuck in this back and forth chop for the last couple days. Actually, let me pull up Ethereum's chart real quick. Check out what the past 7 days look like since we touched that sweet high on the 27th. We've basically been sliding sideways and down. Here's the monthly picture for Ethereum. This is what Bitcoin's month has looked like, and here's how XRP's been doing over the same period. Looking at these charts again, we're still not getting any big moves happening yet. The key thing I'm focused on with Ethereum right now is watching to see if we might get knocked down from these stubborn resistance areas. Let me jump over to the weekly chart to show you what's going on. So our latest rally pushed us up to around 3,800, and yeah, it actually touched 3,900 on certain exchanges. I'm pulling this data from CoinMarketCap just so you know. Here's the deal though. We've got this massive wall of resistance sitting right above us that we absolutely have to crack through. This same resistance zone has been causing problems all the way back since 2021. So Ethereum's really got its work cut out trying to break past this tough spot. Bitcoin's facing pretty much the same challenge. Right now, Bitcoin's still slugging it out against resistance. And when we flip over to the daily time frame, you can see it's grinding against that 120K area. We're all waiting to see if this level finally gives way. Today's going to be absolutely critical for chart watching. We need to see if we can finally break through either of these important levels, the 120K mark or that $117,000 zone. I'm also keeping my radar tuned for a possible dip down to roughly 112K on Bitcoin. That would hand us some fantastic buying chances, which is exactly why I keep hammering home the point about keeping some stable coins ready for today's FOMC announcement. Here's the thing, I'm actually betting we don't get a rate cut today, and I'll break down my reasoning, but either way, it's going to shake up the markets big time. This is exactly what I'm laser focused on for both Bitcoin and Ethereum. When it comes to Ethereum and the possibility of a big sell-off, the main levels I've got my eyes glued to are a potential bounce back to around $3,047, or maybe somewhere in that higher range near $3,500. Honestly, anything happening within this zone would be perfectly normal to me. I'm actually thinking we might get a nice little retest of this area since we're smacking into some serious resistance up top. This would actually be a sweet spot to watch for any real action on Ethereum. We'd probably hang out down here for a bit before making the next major push above all this stubborn resistance. So overall, I'm not expecting anything too wild. I don't think we're going to see the market completely tank or anything dramatic like that, but altcoins are definitely going to take a harder hit because Bitcoin dominance is sky high right now, and Ethereum dominance is pumped up too. That's exactly why we're keeping a close eye on coins like XRP. With XRP, the big thing to watch is whether it loses these recent low points. We really shouldn't be dropping below those levels. If we do break down from there, then XRP is probably going to get hit even harder. The specific level I'm tracking on XRP first is that $2.72 mark. Really, I'm watching anywhere from 260 to 275 as potential targets for XRP if we see it break below those previous lows and start getting that amplified drop that hits all the altcoins. But let me show you a few interesting developments. First up, BlackRock's CIO is now pushing for the Federal Reserve to slash interest rates. We're seeing more and more pressure building on the Fed to start making those cuts. Take a look at this.
Look at the housing market, and particularly what impacts lower income. The people that borrow today are lower income, and they're adversely infected by where these rates are. If we get the rate down, you actually can bring home prices down, you build more houses, you'll actually reduce inflation. So I think it's quite consistent to bring the interest rate down, even though the economy is operating at a pretty good level. Where we're going is to a lower level of inflation, and I think we can bring it down. I mean, you think about inflation break-evens today, depending on which part of the curve, are 2.5 to 2 3/4. So the funds rate, even if you bring it down to 3 1/4, you're still above the rate of inflation. So I think we got plenty of room to drop it, even though the economy is operating well.
So yeah, look, this whole situation is becoming super obvious at this point when you consider where inflation's landed. I honestly believe we should be getting some rate cuts too, but I'm still thinking July is way too rushed. We'll get into that more. But here's where it gets interesting. Trump's also jumping into the conversation. Trump's out there demanding that Powell needs to hack rates by 3 full percentage points. His whole pitch is that the Fed should drop rates by 3 points because he claims every 1% reduction saves us $360 billion. Trump's basically calling Powell out, saying he's got to make this happen. Any smart person would do it. That's his take.
We should be 3 points lower. Each point is $360 billion. Can you imagine that? That's big numbers. Each point, 1 point of cut, is the equivalent of $360 billion in savings. That's big stuff, you know. Those are big numbers in the U.S. Everything's big. He should cut. A smart person would cut. You know, he leaves very soon, so it's like one of those things. But I'll miss him greatly.
I'm honestly siding with Trump on this one because I think we've got massive room to bring these rates down. So what's keeping the Fed stuck? Well, they might still be hung up on all that tariff and trade war drama. That's been their go-to excuse pretty much all year. Check this out from Paul Barron, though. He's saying polymarket traders are calling Powell's bluff. We're looking at 96.3% odds against a July Fed cut on polymarket. Even with Trump putting all this public heat on for immediate cuts, this EU deal situation might have just wrecked the Fed's whole argument. Did Trump already have this deal locked up when he visited the Fed? People are starting to think we might actually get a soft July cut. Here's why this could be huge. First off, Powell basically admitted they would have cut rates already if it wasn't for the tariff mess. This EU deal could flip the whole script. But we just got word that the US and China officially agreed to stretch out that 90-day tariff pause. That's definitely positive news. Still, this could give them another excuse to sit back and say, well, let's just see how this whole thing plays out first. But here's what's really wild. We're also dealing with tariff rates that have hit 20.6%, which is literally the highest we've seen since 1910. Markets are basically screaming that we need 100 basis points worth of cuts just to keep things from falling apart. The institutional money is starting to whisper that a July surprise might be possible, but they're still putting their chips on September and October being more realistic. The Fed has basically backed themselves into this tariff corner. And yeah, I totally see their dilemma. Listen, I still believe the Fed's got enough excuses in their back pocket to just pump the brakes. I'm betting they're going to stay put in July. Then we'll see those cuts start flowing in September, October, and December. It's like watching the exact same movie we saw in 2024 all over again. Guess we'll find out soon enough. But that's where I'm putting my money. Would love to hear what you're all thinking, though. Hit me up with your predictions. But when we look back at where we started July, these were the 2025 rate cut expectations floating around. This gives you a pretty clear picture of what's been bouncing around in everyone's head regarding Fed strategy. But here's the reality check. When retail traders are absolutely convinced we're getting a July cut, that should pretty much spell out what's actually going to happen. History shows us that when retail gets super confident about something, the market usually throws them a curveball. Don't get me wrong. There's still a possibility. So when we're talking about this whole thing, 3 percentage points would be absolutely massive. But here's the million-dollar question. Are we actually going to see that happen? Are we getting a rate cut kicked off in July? I'm really not convinced we will. I think we're basically sticking to the same playbook we saw back in 2024. We're sitting about 16 hours out from the FOMC meeting right now. By the time you're watching this, we'll probably be closer to 14 hours away. But if we're talking about a July rate cut happening, there's only about a 3.1% shot at it. What I'm really focused on is us following that 2024 roadmap, rate cuts in September, October, and December. Back in 2024, it went September, November, December. But looking ahead, we've got a 65.4% chance in September, 82.4% chance in October, and a whopping 94.1% chance in December. This is exactly the timeline we should be paying attention to. I mean, honestly, getting 1 basis point cuts in September, October, and December would be absolutely game-changing. I don't think we're getting that full 3 percentage point drop, but we'll see how this plays out. I'd be thrilled to see 1 basis point in September, October, and December. That would be incredible for real estate, stocks, and crypto. But I'm thinking maybe 1 basis point in September, then a bigger 50 basis point cut in October, and wrapping up with 25 in December would be pretty solid too. That's almost 2% total, which feels pretty reasonable to me. But the real question is, does this actually happen? Do we start seeing rate cuts in September? Or does Jerome Powell completely blindside everyone and go against everything we've been hearing for weeks by saying, surprise, we're cutting rates now? It's definitely possible, right? There's a chance we could get a rate cut in July, literally tomorrow, but I'm just not feeling it. It's still on the table as a possibility. We have to keep our minds open to it being possible, but I just don't see it going down. Now, if we hop over to Truflation's data, they're saying interest rate cuts are definitely on the way. Their take is that inflation's getting stable around the target level, and these high interest rates are seriously damaging the economy. They're basically saying time's running out, the Fed needs to quit dragging their feet, the economy should matter more than anyone's pride. What's really interesting is that Truflation shows inflation sitting right at 2%. That gives us tons of wiggle room to actually slash rates, because even if we went back to the original 3.5% interest rates, that would be totally manageable. Right now, we're hanging around 6.5%. So yeah, those 3 percentage points Trump's talking about would actually make perfect sense. There's definitely a world where Jerome Powell walks out there and drops a bombshell like, surprise everyone, we're slashing rates today. But my focus is really on September being the sweet spot. October and December are looking pretty promising too. And when we're talking about how this whole thing's going to shake up the markets, Stephen Moore actually jumped on Fox News recently and made some pretty bold claims about how the American economy is absolutely crushing it right now. He's talking about record-breaking stock market runs, unemployment sitting pretty low, solid job creation, and both consumers and businesses feeling really confident. His take is that whether the Fed decides to cut rates or just stays the course, we're still riding high on these massive tax cuts and trade deals that are keeping the momentum going. I'm actually nodding along with this perspective. I'm about to roll this clip in just a moment, but tons of people were hitting me up during yesterday's live stream asking the same thing. If we don't get that rate cut, are the markets going to take a serious beating? Honestly, I still think the markets are geared up for some serious upward action. I'm really not sweating it, whether the Fed cuts or holds steady in July. But here's where I think things get really exciting. September could be the month that really sends markets into overdrive, if we get that rate cut then. From where I'm sitting, and even looking at what CME Group's data is showing, we're looking at about 65%, almost 66% odds that we'll see a rate cut happen in September. Those are the kind of odds I'd feel pretty comfortable backing. Let me show you this clip.
So it sounds like an optimistic message during what sounds like a productive meeting, Steve. But what does all this mean about interest rates? People just want to know, are those rates going to come down?
Well, they're meeting next week, and I think any of us know what Jerome Powell will do next week. I will say this, though. The lead here is that the economy really is doing really well. It is on fire right now. Look at the record gains in the stock market. Look at the employment, record low unemployment. We've got a lot of job gains in the economy. We've got consumer confidence, business confidence. Hard to see anything that's not going right with the economy right now. So whether the Fed cuts rates or raises or keeps them where they are, and I think there's room for a quarter point or maybe half a point reduction. I remain bullish either way because of the tax cuts and these trade deals that are really helping the economy.
Yeah, I mean, honestly, all these trade deals and tax cuts, everything going on right now should really calm our nerves about whatever move the Fed makes. But you know what? I still think the Fed's going to absolutely ignite these markets once we roll into September. So we're probably going to hit a bit of a snooze button here. The markets will likely keep grinding sideways for the next week or two. Bitcoin's already been stuck in this back and forth for basically half of July now. With Ethereum, yeah, we've been creeping higher, but things are starting to feel pretty sleepy action-wise. Right now, I'm just laser focused on getting through this FOMC meeting. After that, markets will probably chill out and get pretty boring for a week or two. But here's where things get spicy. Towards the end of August, maybe around mid-August, I think we're going to watch these markets wake up in a huge way and carry that energy straight into early September. Then, once we hit the second half of September, markets will probably go completely nuts because we finally get that rate cut, which basically turns on the money faucet and floods the system with liquidity. Should keep markets pretty pumped for the rest of the year. So honestly, whatever curveball the Fed throws us tomorrow, actually today at this point, I'm not losing any sleep over it. Like I keep telling you, I'm still super bullish on both crypto and stocks. And once we get that Fed rate cut, real estate's going to get a nice little boost too. Markets are looking amazing as we cruise toward year end. 2026 is when we should start getting our guard up. That's basically my roadmap right now. Obviously, things might change as we get closer to 2026, but that's what's on my radar at the moment. So there you have it. Hope this breakdown gave you some good insights. If it did, go ahead and smash that like, hit subscribe, and flip on those notifications for more free stuff.